Hi, everyone. We're going to give it a few more minutes and then we'll get started. All right, I'm going to go ahead. Good afternoon. My name is Whitney Lynch, and I'm the Business Development Manager at NCPA. I'd like to welcome you to our Business Booster webinar, Buying a Pharmacy, presented by First Financial Bank. NCPA recently released 2 quick start guides to better assist those looking into pharmacy ownership. The NCPA team spoke with business experts and current owners to pull together a checklist of what you need to know and do to open or buy a pharmacy. You can download your copy and check out other valuable resources at ncpa.org/buyers. We're very thankful for First Financial Bank's support of this page and quick guide resources. Joining me is our speaker, Bo Garman, loan officer from First Financial Bank. Bo has over 20 years of experience in retail and commercial banking. He joined the client-focused pharmacy loan team at First Financial in 2012 to specialize in helping those who are looking to acquire or build a pharmacy. Before I pass it off to Bo, I did want to cover just a few housekeeping items. Throughout the presentation, if you have any questions, you can use the question feature, or we will address as many questions as possible with our remaining time. Please note that if you do submit questions, they're only visible to myself and the speaker. So now, without further ado, I'm going to pass it over to Bo.
Hey, thanks, Whitney. Always good to be with you guys and appreciate the partnership with NCPA. Want to just take a few minutes to thank everybody for joining us today. I know this is a busy time of year and your schedules are busy. So, I appreciate taking the time. Today we're going to cover some important things to consider when buying a pharmacy. Obviously, being in the banking industry, it will be geared a little more towards the financing of pharmacy acquisition, but hopefully can provide everybody something that they can take with them when considering buying a pharmacy. As Whitney said, if you don't mind, let's hold the questions till the end, and then I can be available to answer those questions once we're done. So getting started, just real quick, I'll tell you a little bit about who we are and what we do. First Financial Bank has been in business for over 85 years. We're headquartered in Arkansas and still locally owned, locally managed bank with over $1 billion in assets. Our lending footprint covers the entire United States. We're one of the top SBA lenders in the country and have a preferred lender status with the SBA. As Whitney mentioned, we got into the pharmacy space a little over 10 years ago, and I'm proud to say we are one of the premier SBA lenders for pharmacies in the country. Our pharmacy team is dedicated to working exclusively with independent pharmacies. The team includes, myself and also on staff, we have a pharmacist and a former owner and current owners. Together, we've got over 75 years of experience. And our pharmacy team has originated over $300 million in loans to independent pharmacies. So we're committed to this space and helping to continue helping independents grow. There are a number of reasons you may need financing, and the reason that most of you are here today and what we do most really is that you're interested in acquiring a business. In some cases, this includes buying the real estate in which the pharmacy is located. In other situations, you're just buying the assets of the business and the pharmacy leases the location. Either way is fine. With us, if you're already an owner, you may need to finance an equipment purchase or expand or remodel your current store, or you may need to refinance some existing debt, or need some additional working capital to manage some growth. In any case, we're here to help. Many pharmacy owners and potential owners will take advantage of loan programs offered by the SBA. The need for SBA financing for most pharmacy acquisitions comes from the structure of the transaction. In most cases, the buyer is buying a large portion of goodwill or prescription files, which is considered to be an intangible asset. Most conventional lenders are not comfortable in financing intangible assets due to the lack of hard collateral. For this reason, a lot of pharmacy purchases require SBA financing. These programs are offered through participating banks who partner with the SBA to lend the money to the small business. The loans are, it's a commercial loan in which the bank lends the money directly to the small business. The SBA then provides a guarantee to the lending institution based on the guidelines set forth by the SBA, and those guidelines are going to be consistent to all banks. The term for these loans are usually 10 years. If there's not real estate involved, if you're purchasing real estate, it's possible to extend that term up to 25 years. The down payment, or in what SBA terms, the equity injection required from the borrower is 10% of the total project cost. And we can talk a little bit about that later. The banks do have some flexibility in setting their rates that are offered. And then lastly, when choosing an SBA lender, I would encourage you to use a bank that has a PLP or preferred lender status with the SBA. That allows the lender to issue approvals in-house and not send those to SBA for their approval, which can help streamline the process. To be eligible for SBA financing, a business must be considered small by the SBA. And SBA uses NAICS codes for each industry to determine what the size standard is for that specific industry. The NAICS code for pharmacies and drugstores is 456110, and the size standard is based on the annual gross income. The size limit for a pharmacy to be considered small is $30 million in gross income, which most independent pharmacies fall well below. It's also important to know that the maximum loan amount for SBA loans is $5 million. And keep in mind, this includes all SBA debts to that particular borrower. So if you already have an SBA debt, that would count against your cap. So as an example, if you have a loan for $1 million with SBA, you would have $4 million still available before maxing out. So looking at community pharmacy today, independent pharmacies make up a $67 billion marketplace. It's estimated there are over 19,000 independent community pharmacies in operation today. Average store does about roughly 3.5 million in gross sales on average annual scripts of 57,000 per year, and their gross profit margins around 21%. The interesting part of this slide is that it's estimated that of the 19,000 stores in operation, roughly 100,000 will have a change of ownership this year. And that number should remain strong or even increase because as the average owner is being 62 years old or older. It's also interesting to note that most store owners are multi-store owners and that they average owning 2.1 stores. So that being said, let's kind of switch gears and look a little closer at buying a pharmacy and what to look for in a successful acquisition. Obviously the first thing you need to do is identify a target. But the question is, how do you do that? It's not like you can drive down the street and see a for sale sign out in front of a pharmacy, right? So how do you find a pharmacy to buy? The good news is there are some good resources out there. Sometimes your wholesale drug reps that are out in the field have a good idea who's looking to sell. Also, most of the major wholesalers have transition teams, which are a great resource for you that come at no cost. One thing not listed on the slide are pharmacy brokers. And they typically have listings of pharmacies for sale. In the pharmacy space is really it's a tight knit community. So just growing your network and asking around, getting your name out there, that can obviously help. And then lastly, you'd probably be surprised how effective it is to just simply, put some business cards in your pocket and go out and drop in some places and approach the owner and just say, look, I have no reason to believe that you're wanting to sell, but if you are, I'd love to chat. And then you'd probably be surprised how many callbacks you might get from just doing that. We're considering to buy a pharmacy, you need to look at a number of things. First of all, you got to know, where you're willing to buy. Are you willing to relocate? A lot of times, especially in smaller markets, there just aren't any pharmacies available for sale, or if they are, they aren't necessarily good acquisition targets or maybe struggling. So you may need to be willing to move or be extremely patient in your search. Another thing to consider is what size pharmacy you're looking to acquire, and know if you're wanting to get into specialized services such as compounding or specialty. In my experience, it's worth looking at higher volume stores, even though those may come with a higher price tag. Those are typically doing a little better financially with the higher volume, and it tends to be a more cash flow available to service your debts. And then lastly, you got to know who's on your team, and it's critical to assemble a group of advisors to help guide you through the process. Those advisors would include, an attorney, accountant, or CPA. You'll need a wholesaler and then a banking partner, obviously. I would encourage you to look at people with pharmacy experience when building your team of advisors. I just find that this can help make the process go much smoother. As a buyer, it's important that you have a good plan in place. You'll want to make sure you're prepared both financially and you have a good understanding of the opportunity at hand. You'll want to make sure your credit history is clean and that your credit score is good. We typically like to see a credit score of 680 or better. In most cases, we want to see a pharmacist on the deal. So, having a pharmacist license in good standing is important. It's always valuable if you have a mentor or someone that you can lean on for advice, or a seller that's willing to help with the transition. A lot of times we see a situation where somebody is the PIC at that store and been working there for a long time, and the owner is wanting to transition out, and that's always a good scenario as well. You'll want to make sure you have your savings on hand for a down payment. Most banks are going to require proof of funds for at least 2 months, and we'll talk more about that later. Most importantly, you want to be patient and find the right opportunity for you. That's going to be determined by doing your due diligence and making sure that pharmacy is priced fairly and that you feel comfortable in operating the business. Once you've identified the target and you've done the due diligence, that's when you can start the negotiation with the seller and hopefully execute a letter of intent or an LOI in which both parties can agree upon a price. And then once you get to that point, then you can work on getting a bank and an attorney involved and help to structure a loan and purchase agreement that meets your needs. Again, keep in mind a lot of this can take time, so the quicker you can get started in all this, the better. And these things generally just don't come together overnight. This slide touches on some things that would make a pharmacy attractive to a buyer or not attractive. Generally, we like to see revenues of at least $3 million and then steady growth with a gross profit margin at or above the industry average. You want to make sure the staff is competent and that the expenses and rent are reasonable. If they're doing things that differentiate themselves from the competition, that can also be attractive as well. Some things that are not attractive would be a lower volume store. Again, generally speaking, not always, but depending on the circumstance, most I find it's hard to find financing for a pharmacy doing less than $2 million in sales. It just doesn't appear to be enough cash flow to pay a pharmacist and service any additional debt. Other things that would not be attractive to a buyer would be limited growth potential, or declining sales or prescriptions. A lease that has poor lease terms, or if the seller is just asking a premium, which is not uncommon. And then if you have inaccurate or outdated financials, that would not be favorable. Again, at the end of the day, it's all about cash flow and profitability. Most expenses, such as your rent, utilities, those things are static. And the two areas that can really have the biggest impact on profits are payroll expense and then the gross profit margin. So usually the first question I get is, how do I know what the pharmacy is worth? Ultimately, the business is worth what the seller is willing to accept for it and what the buyer is willing to pay for it, right? But when evaluating a deal from a bank's perspective, it's pretty simple. We want to be able to show that the pharmacy generates enough revenue to at least pay you a market salary as a pharmacist, service the debt repayment, and then have some left over for cushion. We typically like to see a debt service coverage of at least 1.3, preferably higher, but meaning that the pharmacy generates normalized cash flow available for debt repayment of 1.3 times the annualized debt payment or greater. So let's take a look at what you need to do a proper valuation. Number one and number three are going to refer to the financials of that business. The last 3 years tax returns and the most recent P&L and balance sheet. That's going to be where we can determine how much cash flow is generated by that business. The dispensing reports in number two there, that's going to give you a good idea of the mix of the business and help identify any red flags, such as a concentration of certain drugs or prescribers or payers. It's important to understand that the quality and accuracy of those financials are those things written down on a napkin, or are they prepared by an accounting professional, or more importantly, accounting professional with pharmacy experience? When analyzing those financials, you also want to identify any expenses that are non-recurring or at the seller's discretion. Those would be considered add backs to the cash flow. Those items could consist of personal expenses such as an owner's auto expense or insurance premiums, or a salary to the owner or family member that doesn't actually work in the business. There are a number of formulas that are used to calculate the value of pharmacy. These are the three most common. The first one is a multiple of the cash flow generated by the business. And this one's the one that most banks and valuation companies will lean on the most. The other two are, the second one there is a percentage of gross sales in a dollar per script method, which is what a lot of the chains use. Again, I would focus on the first one using the EBITDA, which is the earnings before interest, taxes, depreciation, and amortization. And we typically use a multiplier of 3 there. So this would be an example of how to value a pharmacy based on all three methods. This particular pharmacy we're looking at here it's doing $4 million in revenue a year. Fills 65,000 scripts annually. And assuming the tax return shows net income of $145,000, we add back the depreciation and amortization of $60,000. Let's say the owner's paying themselves a bonus of $50,000, which would not continue, and then they expense their personal Lexus lease for $15,000 a year, and then the spouse, they're paying them $45,000 as a bookkeeper, but those services won't be needed after the sale. That's going to give us normalized EBITDA of $315,000. So looking at option one, the multiple of EBITDA, if you multiply that normalized EBITDA by 3, you come up with a value of $945,000 plus the inventory. Option 2, which looks at the gross sales method, we take gross sales of $4 million, multiply that by 20%. That would give you a value of $800,000 plus inventory. And then finally, option 3, was a price per script, in which we have 65,000 annual scripts applied, a multiple of $15 per script, and it gives you a value of 975,000 plus inventory. So now we can look at how to structure a deal. I mean, the first thing you want to know, is it going to be an asset purchase or a stock purchase, and what's included in the sale. And in a stock purchase, a buyer is simply purchasing the stock of the existing entity that owns that business now. And an asset purchase is when the buyer would establish a new entity and just purchase the assets of the business and bring that into the new entity. Either way is fine. I would encourage you to consult your advisors on which one's best for you. There's certain tax implications for each method, and then there's also, depending on which state you're in, some licensing issues that may or may not be more advantageous with a stock versus an asset purchase. Again, SBA is going to require 10% equity injection of the total project cost. In that case, the bank would provide financing for the remaining 90%. In most cases, we'll need to build in working capital on the loan as well, because you're probably not buying the receivables. So you need cash on hand to replenish inventories while you're waiting on reimbursements. Having sufficient working capital is crucial, and you're probably going to you'll likely need more than you think. The main thing is you just want to make sure that you're properly funded going into the transaction. Again, it's important to note of that the equity injection, it's not 10% of the purchase price, it's 10% of the total project cost, which would include the purchase price plus any working capital or any fees that are built into the loan amount. It's also important to note, in some cases, we will use seller financing, in which the seller would hold a note for a portion of the acquisition cost. This can be applied to the equity injection requirement for up to half or 5%, which would decrease the amount that the buyer would need to inject in half or 5%. It's important to note, for that seller note to be applied to the equity injection, it must be on a full standby for the term of the SBA loan. So in this case, 10 years. And what that means is that the seller would agree not to accept payments on the note for 10 years. And, a lot of times that can be a tough sell for some sellers. But on a larger deal that does require a large equity injection or down payment, it may be necessary for them to step in to get that deal done. So here's how a deal would look. In this scenario, we're purchasing the pharmacy or the Goodwill files for $945,000, and the inventory is $250,000. The bank is providing $175,000 in working capital, and the closing costs would total $30,000. That's going to give you a total project cost of $1.4 million. The buyer would make the equity injection of 10%. Or $140,000, which result in a bank loan of $1,260,000. Again, the bank loan would typically have a term of 10 years unless there's real estate included, and then that could be extended up to 25 years. Sorry. So this slide references some do's and don'ts. All of these are good points. I can't tell you how many times, I look at a deal for somebody and the financials just don't support the purchase price, and I'll say, why do you want to buy this? And the answer is usually it's in my town and it's the only pharmacy for sale. But that in itself is not a reason to buy if it doesn't make sense. So it's important to do your due diligence. I can't state that enough. And if you can't make your loan payment, the bank doesn't want to finance it, and quite frankly, you don't want to buy it. So you want to have a good understanding of the business and how the cash flow is generated by that business. Be sure to lean on your experts and advisors, and always expect the unexpected. And then it's always a good idea to do a pro forma to kind of forecast the future performance. some things you don't want to do. You don't want to limit yourself on what's there. Look for potential, but don't pay for potential. As I mentioned earlier, you got to take the emotion out of it and make a sound business decision. Don't assume that the bad trends are easily fixed or that good ones will continue. A good example of a good one right now is COVID revenue. A lot of pharmacies are showing a lot of revenue from COVID, or from vaccinations, which may or may not continue. So that's something to be aware of. Lastly, don't get into a bidding war. And at the end of the day, again, we got to just make sure and do your homework, know the opportunity in front of you, and you should be fine. So that completes the presentation for today. Obviously my contact information is there on this slide, and I'm always available to answer any questions that you have. So don't hesitate to reach out. But mainly, I want to take some time here to open it up for questions and go from there.
If you want to, you can use the Q&A box, or if you raise your hand, I can unmute you so you can ask any questions that way as well. Lee, you should be good to, you're
okay.
unmuted.
Thank you both for, yes, can you hear me?
Yeah, I got you, Lee.
Okay. Thank you very much for your presentation, Bo. It's very insightful in the slides as well. Whitney, will we be able to get these slides subsequently after the presentation?
Why don't you?
That, Lee, we were just talking about that beforehand. My hope is yes. I just need to make sure and clear that with compliance. It's
okay. And Bo, there was a statement you made earlier, and I don't know, I might have misread it. On one of the slides, there was a 1K presentation. You said 100,000. So I'm not sure which one of those figures was correct.
Say that again. I'm sorry.
You hit on one of the slides,
right?
Kind of on the right side of one of the slides, kind of halfway through, and I can't remember what it was. I didn't write it down, but you had 1K, but you mentioned 100,000 right there. No, go back right there.
I think I know where you're.
Oh, we just passed it. Something about. I'm sorry, Whitney. One keeps. No. We had it a minute ago. No. Nope. Right there. Okay. Let's say the 19,397 pharmacies estimated that 1K
1,000
will change hands. Okay, you mentioned 100,000, and I wanted to make sure that.
No, that's not accurate. So
okay, all right. That's what scared me a little bit. All right, great. Thank you, Bo.
Yeah. Thanks, Lee.
Jeff, you should be good to unmute.
Okay, thank you. Bo, you mentioned that generally speaking, you're looking at finance.
Oh.
I think you hit mute, Jeff.
There we go. Can you hear me now?
Yep, you're on.
Okay. You mentioned earlier that from a financing standpoint, most people aren't interested in financing in a pharmacy market anything less than about 2 million in sales.
Right.
Okay. What about when you get into really specialized, for example, a compounding?
Yeah.
Oh, go ahead.
That's a good question. And that's why I said, generally speaking, that would be just, traditional retail without any specialized services. So yeah, in a situation where you're, for instance, a compounding, you're probably going to be seeing a lot higher margin.
Yes.
And probably more cash business. So that would be an exception.
Okay. Yeah. Cause I'm actually looking at a compounding pharmacy that's been in business for about 10 years. About 600,000 in sales this year projected based on 11 months plus a month coming, with historically 36% net profit.
Yeah, that I actually got one on my desk. Maybe the same one, but
no.
looks a lot like that.
Okay. Thank you.
You're welcome.
We'll be contacting you.
Good.
All right, looks like I have one more hand raised, and then we've got some questions in the Q&A box. So we'll go ahead with this one. Can you hear us?
Hey, can you hear me?
Yes.
Can you hear?
Yeah, I can hear you.
Oh, hey, yeah. So I'm looking at a pharmacy. It's like 2.3 million.
Okay.
It's a retail standard pharmacy, and they have like 23% margin. But the net comes out to be like, I would say the EBITDA comes out to be like, after adding all the add backs, probably 70K.
Okay.
What would you, I mean, they do about 35,000 scripts a year. They've been running for 15 years. I don't see a lot of potential to grow, but what is your opinion in that scenario?
It's as far as a value on it.
Yeah, value wise.
Well, I mean, without diving in and knowing more.
No,
about
I know. Based on
I
what
would say, if you've got that normalized EBITDA of 70,000, you can multiply that by 3 would be a good place to start.
Got you. Okay. Plus the inventory.
Yes.
Okay. All right. Thank you.
Thank you.
Bo, can you see the Q&A box?
Can't.
Okay. I'll read through some of these. And okay, so our first one says, why wouldn't you buy receivables to have cash flow?
You certainly can. Whatever reason, it's usually not something that goes along with it, because usually if you're going to buy receivables, you're going to be buying payables as well. So it's oftentimes just cleaner to add the working capital to the loan and have that as you get started to manage that cash flow.
All right. The next question, are you seeing long-term care pharmacy purchases? If so, is your purchase price formula the same?
Again, each deal is specific to that particular store and multiples, but yes, I mean, certainly people are buying long-term care pharmacies. It's a little bit harder on a bank side to finance because of the fact that there probably are a lot of concentration in particular facility. If you were to lose that piece of the business, then there's an additional risk. It's not like you lose one patient, you lose a whole lot of beds.
All right, so the next one, let's see. Is the 10% owner responsibility the expectation for buyouts and new startups, or is the capital responsibility higher for new startups, like 20%?
No, 10% still a requirement on a startup. As far as any kind of a partner buyout, there is some opportunity there to use the already acquired equity in the business as a portion of that injection. So it's possible you would not have to have the cash injection on a partner buyout, but the startup would require 10% of total project costs.
That is our last question that was in the Q&A, and I'm not seeing any other hands being raised right now. Are there any other questions for Bo while we're still on? All right. Well, I want to thank you so much for joining us, and thank you to Bo for such a great presentation. I also want to thank First Financial for your insights and sponsorships of NCPA's Opening a Pharmacy Quick Guide. If you want to download that, you can go to ncpa.org/buyers. Also, on January 10th at 2 o'clock, the same time slot, we're going to have a follow-up webinar, which is titled Opening a Pharmacy, and that's also being presented by First Financial Bank. So thank you again for joining us, and thank you, Bo. If you have any questions, feel free to reach out to me or Bo as well. We can put his contact information again up here, and we will try to get the slides out to you as well via email.
Hey, Whitney, if you want to put in there, I don't mind putting my phone number on there. I don't think it's on that slide.
Okay.
You can just put it in the chat.
Okay. All right.
Have that.
I will do that. Yes. I'm going to put your email and your phone number.
Okay. Thank you.
All right.
I'm sure there's a way I can do it. I'm just not smart enough.
No, you're fine. You're fine. All right. Well, thank you all. And we will see you again, hopefully in January.